Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, welcome back to another episode of the Real Estate Investing Club. Today we have with us Aaron Norris. Aaron's real estate career started at 5 years old, fixing houses in his father's flip business. After living in New York City for almost a decade, he joined the family hard money business as a mortgage officer and researcher, producing numerous market timing reports and award-winning resources for the real estate community. As VP of Market Insights for Property Radar, he speaks and writes nationally on trends and the power of public records that help Main Street compete with Wall Street. That is a perfect intro. I love it, Aaron. Thanks for hopping on the show.
Hey, thanks for having me, Gabe.
Absolutely. As I mentioned before we got on here, we always start with stories at the Real Estate Investing Club. So why don't you take us to the beginning? How did you get started in real estate?
Flipping for peanut butter and jelly sandwiches, like in the bio. Started at 5. My dad became a full-time real estate investor in 1980, refinancing our primary residence at 17.5% to get the money needed to be a full-time flipper. So all you millennials out there who call me complaining like, oh my God, rates are terrible, just stop.
17.5%. That's intense.
Yeah, these are lifetime low interest rates. So yeah, my very first memory of flipping a house involved a vacuum sucking up cockroaches on the wall for hours as my family was tearing up the carpet of a specific flip. So
nice. That's a good one.
So I've been in this space for a long time. I took I became a professional performer in New York City for 7 years. I've always been in the arts, and then I got sucked back into the family business in the mid 2000s. So 15 years later, here I am, love real estate, hard money, building, flipping, and now technology and data.
I know. I love it. And that's why I'm so excited to have you on the show, is because you've touched it all. I mean, you are the first person that has, the hard money side, the flipping side, and the technology side. I've had people with, one or two, but not three. So that's impressive in its own right.
I think it's so fun to have. You're just as likely to catch me at the Consumer Electronics Show in Vegas than you are at a local RIA meeting. I love learning and discovering how technology is going to impact our business. So I've been studying iBuyers and Wall Street for, I guess getting close to a decade, just trying to find out what they're doing. I'm an intense advocate for Main Street. Having grown up in a small business, we just have to get savvier. So that's part of my gig, is just to really inspire real estate investors nationwide that the tools are there and data isn't just for Wall Street anymore. And it's fun. It really is.
Yep, absolutely. And that's well, let's just get into that. I'm really excited to talk about the tech side because I've used Property Radar before, as I mentioned before we got on. It's a great tool. The data is there and really clean UI. So why don't you take us into the tech? What do you see for, kind of the average Joe? What do you see as the, what am I trying to get at here? For the data that you guys get, that you glean, how do you get the data? Like what makes it competitive for the people that are actually using that data, and then how can they use it most effectively?
Good question. And data comes from a lot of different places. Public records are free. You could go down to your county recorder's office, the assessor's website. There are things that you can get on your own. The magic of Property Radar is that it's all in a beautiful user interface, and easily you can stack your criteria and your lists and find a very specific niche. And that's how you end up saving a lot of money talking to the right contacts. So I like to call it right-bound marketing. So I have some people who use Property Radar just because they can have the phone numbers and they just want to call. And that's all they do. They don't do direct mail. They don't do SEO and PPC ad campaigns or door knocking. They just call because they're really good at giving good phone, as one of my friends says. And then, some people do the direct mail opposite, and we have emails as well. So the magic is just finding that niche. If you have a passion, and this is also the biggest mistake I see. I see a lot of people show up, on a Bigger Pockets, or they listen to a podcast and they get thrown so many different ways to do this business and they get overwhelmed. And they don't realize it's okay to bring you. That's why I love to tell the creativity story. I used to be an actor based out of New York City. If I can make my way into the real estate space and make it work, you can too. And it's okay to bring you and say, this is what I'm good at. If you're an introvert with no money and I start talking to you about door knocking, you're going to hate your life. So there's strategies that fit your personality and what you're passionate about, and then we can back in the data. So if you can bring you, I promise the data is there. So what's cool about Property Radar is it's mortgage, property, and people data. So one of my favorite bullet points is finding people who give to animal charities. So you can send lots and lots of cat postcards.
That's pretty
and since we went national, we've added a lot of advanced property types. So things like mobile home parks, commercial, everything's been expanded to where you can get a lot more granular. So not only can you search, I want to only look at 3-bedroom, 2 bathrooms, under this square footage. I want to look at transfers that last happened here. I want to talk to homeowners that are only over the age of 55. So those are just some of the things that you can play with that a lot of people just don't know are possible all in one space.
Yep. And actually, I'm glad you mentioned that. So I don't know if you guys actually have the data in terms of how successful it is once the person uses the data. So they buy it from you guys and then they use it out in the field. I don't know if you have those kind of numbers, but I'm curious, what criteria do you see, I guess, being used the most, or just having the best success when it comes to somebody, let's say, looking for a single family flip up here in Pacific Northwest?
Okay. There are definitely, because it's not just real estate investors who use Property Radar, realtors, mortgage professionals, home services, people who do solar, install pools. So lots of different niches. So I can't say like, hey, this criteria. I think I can tell you my favorite. I love the absentee landlords over the age of 65. For those of you who like to talk about creative financing, subject to, when we can match our message with our list, it's a lot more interesting. You don't want to send a generic yellow letter to an experienced landlord who owns 100 rentals. I've certainly had real estate investors get to tackle and make offers on an entire portfolio with a landlord who still wanted the income, just didn't want the tenants' toilets and trash. So by knowing who you're talking to, it can make a huge difference. So I love the absentee stuff and the age, the demographic information. Those are sort of my two favorites right now.
Yeah, that's actually when me and my partners were using Property Radar. And I only say we were using Property Radar because we were in single family. We've moved on to mobile home parks. I actually didn't know that you guys did mobile home park data, so I might be coming back to you. So it's great that you guys are in the commercial space now. That's great to hear.
Yeah.
But yeah, the criteria when we were using Property Radar for single family, we actually targeted the ones people who owned 3 or more properties, because we were looking for the tired landlords. And we actually had a bit of success with that. It was a good list to do. But you're right. You have to you can't just send the same message to every single person that you pull. A tired landlord is not the same person as somebody who, is facing foreclosure. They're two completely different mindsets, two completely different messages that need to be sent out there.
And you've got competition now. You've got Wall Street that is in our space in certain markets spending millions of dollars burying you, even advertising against you, using your branded terms. If you're known in a market, they will advertise against you and drive up your prices. So it's even more important to make sure you have a niche and you're talking to the right people at the right time and the right channels. Because if you don't, you're going to spend a lot of money competing against these Wall Street companies, and it's not easy.
Huh. Interesting. I actually did not know that. I'm curious because I've been seeing PPC numbers go up recently, and so I was wondering why that was. Maybe it's because people are bidding against us.
Yeah, I do have some case studies in that. I had a Wall Street company. I called out to them because when I was doing hard money full time at the Norris Group, they were using the Norris Group in their PPC ads, like an alternative to the Norris Group, and that's against Google's rules. I had to report them 3 times, and I got an email back because I said, "Hey, you probably hired an outside marketing firm," and they're like, "No, we'll do whatever we need to do to get business." So,
Damn.
yeah, it's down and dirty, and then Open Door just went public. They've got millions of dollars, and as they enter new markets, and then you've got the big Realogy, you've got Keller Williams talking about launching their version of the as-is cash buy. So it's going to get more competitive. So Main Street has to really pay attention to what's going on in the market, who's doing what, and that is another one of my favorite data points that Property Radar can identify is flippers in your market. So you can look at what they're buying, where, what price point, who they are. So if you're new and you just want to follow somebody, you could totally stalk them. It's amazing.
It's crazy the granularity of data we have access to now. It's I'm sure it looks completely different than somebody who got started 20 years ago.
And how I was using it in hard money, what's funny, I started with Property Radar in June because I've been a longtime user. My brother did it full time as a trustee sale buyer, used Property Radar, and I used it for hard money. I didn't even know Property Radar had emails and phone numbers because how I was using it was a very specific way. So the fact that you can get the email and phone numbers and connect to social and have all the transaction data for each property, it's insane. It's almost overwhelming. You ask me a question, success. I can tell you that the program has made billions of dollars for investors, and anybody in the Western 5 states that we've operated in since '07, anybody at the trustee sales has typically been using Property Radar because it tracks every single stage of the foreclosure process. As we go national, we're not going to do that level of detail for closures nationwide. That's just the 5 states. But for the serious real estate investor who really get the value of data, I do say we do have churn from newbies who, and I think that's normal in our business. It's not easy. You watch HGTV and think this is an easy gig, but it takes some work, right?
Just a little bit. Just
a little bit.
So I'm curious, actually. So you've mentioned email and phone. We've used both of those for email blasts and RVM campaigns. Do your numbers automatically go through a DNC list, or is that something that you recommend people doing after they actually purchase the data from you?
I would do that on your own. Please, please, please make sure to follow your state guidelines. California, we've been leading the fray when it comes to privacy rules. You really, really want to make sure you do that right. The fines for doing something wrong can be pretty onerous. So if you're working through some kind of technology platform, we integrate with over 2,000 other technology platforms, whether it be CRM or mail drops, phone drop, voice drop services, stuff like that via Zapier. So if you have your favorite tools, chances are you can do a lot of really cool automation. So let's say I created that list I was talking about, somebody over 65. When they turn 65, you could push it into CRM, get pushed into, a Mojo dialer, and set off a bunch of automated things to where you're notified once specific things happen. We even have a partner that can print postcards like one-off that meet the criteria.
I love Zapier. Zapier is one of my favorite tools because, it just automates everything. There's nothing.
Did you know that we integrated with them?
I didn't. So I haven't used the Property Radar in probably year and a half, back when we were, really focused on single family.
Got it.
So I'll have to get back in there and see what's new, because it sounds like you got some good stuff.
There's a free 3-day trial, and please, 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 if you do it, sign up for a free one-on-one. Our support team is amazing, and oftentimes if you can really come to the table understanding what you'd like to do, it's very easy to show you, and you're off to the races, having a lot more fun way faster.
Yep. And I don't want to turn this podcast into a sales pitch, but
of course not.
For people listening and watching, I really do support Property Radar. I used to use ListSource, which is a good, it's a good tool to use, but it's super expensive. And Property Radar is a lot more reasonably priced, and they have great data. So I do recommend Property Radar if you're in the data game, if you need that data. As I recommend in my course, data is everything. Property Radar is a great way to go.
Cool. Well, thank you.
Yeah, yeah, absolutely. But yeah, let's get back to real estate. So opportunities. Let's talk opportunities. What do you see in the market today in terms of? Let's talk markets. Which market do you see as being? Are you really excited about?
You know, I'm in California. I build to rent in Florida, and I find that this is such a personal conversation. And the truth is, there's opportunity everywhere. It just depends on where you're at in your financial career, your goals. I have people in their 70s who contact me, and this is a game they always want to play, and they're always hustling. And for other people, it's an ends to a mean. And sometimes when you create the nut and you don't need to go any further, it's just time to let it go and be conservative and make sure you're just living life and you're happy. So there's opportunity everywhere. For me right now, I like cash flowing real estate. I've been 1031 exchanging some of my junk that I had in California that I bought for nothing. I'm getting rid of HOA properties because I'm tired of paying $300 HOA fees for 600 square feet condos. And I like brand new houses because they're lower maintenance. So I love being a landlord personally. But I'm also following jobs. I love to follow things like transportation projects. I'm that nerd that likes to get at the local level, look at economic development opportunities, where the job's going. If you have never read a book by John Burns called Big Shifts Ahead, it's a fantastic read talking about how the South is looking like they're going to get a lot of migration as millennials age. It breaks down demographics, talking about why we make the decisions that we do in real estate. Pretty interesting.
I'm going to have to pick that up. Actually, when we jump into the next section, the quick question round, that's one of the questions that I'll ask. So you just hold on to that. We'll talk about it a little bit more in just a few seconds. So you're saying the South, though. That's interesting because I've heard so many people excited about Florida, Texas, even Arkansas and Alabama, and those are two, states that generally when I get a deal that comes across my plate, I'm like, nope, not interested. Arkansas, Alabama, don't really want to go there, but yeah, people are getting excited. I'm surprised by how that area is really garnering attention for investment funds.
Just be careful. I mean, you really have to have a team that you trust there. Our family started investing in Florida in 1990 after Hurricane Andrew. And it's a lot easier when you have boots on the ground that you really trust. Just keep in mind that, labor shortages, supply chain disruptions in 2021 will probably still be, 6 months in. I'm expecting that we're still going to have some issues because I'm building houses now. It's really hard. Oh, wow. And skilled labor is getting a lot more challenging. Even here in California, the last time I did a rehab here, I had to call in favors and I was upsetting neighbors cutting tile at 8:00 at night on the front yard. So just please do your homework. Don't go into a market blind. Homework. Show up. You boots on the ground, do your homework.
I love it. That's great advice. You do need to do your homework. So you mentioned building. So are you doing development too, or is it just, are you focused mostly on flips?
I'm building to hold. Yeah. So as I 1031 exchange, me personally, I like to build brand new houses. It's attracting for me a different tenant, and the rents are surprisingly, we'll talk about a deal later, but I got rid of one junky property, which was my story house, and I turned it into the 3 brand new rental houses in Florida. Very different tenant, and they were each rented for what the one in California was rented for, which was really interesting. So when we talk about, what are you excited about? Everybody's different. Like my brother's a hardcore flipper. He just loves flipping. And then I have other people in my life where if you're flipping, you're an absolute idiot. I think it's okay to be both of those things, but when it comes to wealth building, I've just learned that I'm just a lot more comfortable with being a landlord, and I love new houses because just right now, once you hear my story about my project house, you'll understand why I hate old houses.
Aaron's talking about the daily deal review, which will be probably released the day after this one is released. So make sure to come back and check that out to hear Aaron's story about his nightmare property, which we all have. We all got to start with a nightmare property. That's the golden rule of real estate.
Take them in, learn them, accept the challenge, and just grow.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Awesome. Well, hey, we have blown past the 15-minute mark, so I got to push us into the quick question round. You ready?
Let's do it.
All right. Starts with books, as I said. So 2 book recommendations, one for, I'm drawing a blank. Oh, one for real estate and one for general life wisdom.
Okay. Big Shifts Ahead is probably one of my favorite real estate books right now. And Life Wisdom. Oh, they're so... Shoot, I should have had this one at the top of my head. I have so many. You know what? I'm going to give you a random one. Groundswell. It's a technology and marketing book written in 2005 that talks about sort of the psychology of technology, marketing, and technographics.
Interesting. I love those 3 topics. Well, not technographics. I didn't know that one. But yeah, that sounds like a good book. What was it called again? Groundswell?
Groundswell. Yeah, it's written by 2 people who at the time worked for Forrester Research, so a big marketing research firm.
Very cool. I'll check that one out. Groundswell. And then what was the first one again?
Big Shifts Ahead by John Burns.
Big Shifts Ahead. All right. 2 good books. Definitely going to check them out. Moving on. So this one is for your younger self, the Aaron who was, flipping houses with his dad for peanut butter sandwiches. If you could go back to that Aaron, give him one piece of advice moving forward in real estate, what would that be?
Focus more on finance. I made the mistake to go too hardcore on the arts, and I wish I would have focused a little bit more on STEM education instead of all arts. I did pretty good. I took calculus, but yeah, start with numbers earlier on.
That's interesting. It's the first time somebody said that, but it makes a lot of sense, especially in real estate. You got to know your numbers. If your numbers are wrong, the deal's not going to work out. You're going to be sad.
That's
how it goes. Moving on. And this one is an opportunity for you to brag and flex your muscles a little bit. So what is your superhero strength? What are you really good at?
Community building. This year, with an event we put together called I Survive Real Estate that we started in 2008, we've raised $1 million for charity. And it's just a really cool goal that I got to do with my dad. So, and build relationships with investors across the globe and celebrate mentors that have given back to our industry. And I'm just really proud of that.
I love it. Community building is super important, especially if you want to enjoy your career in real estate. Next question, and this one is a little bit more in depth, but I completely lost my list, so I'm going to forget what that one was. Just go back to the one that I usually ask, which is habits. What habit do you feel contributes the most to your success?
I've been doing something called the Full Focus Planner for 2 years, and it's been very life-changing for me. It's just a quarterly notebook where at the front you write your goals, and it's a daily journal that you write out. And I teach on technology nationwide, and I have gone very non-technology when it comes to personal goals and daily activities, and it's changed my life.
I love that. And I'm the same way. I've found, like, I really do. I'm a huge techie. I'm all in the marketing, all the funnels and all that stuff. But when it comes to doing the goals, I need to have a pen in my hand. I can't, typing for some reason, there's a disconnect between my brain and the screen, just does not work out. So it's interesting you said that. I agree with you.
Yeah. Full Focus Planner. If you've never looked at anything like that, it's a little nerdy, but it's as hard. Actually, I have it. How funny. It's like right here. And it's great. I can't tell you. If nothing else, 4 times a year, you have to review your goals and remind yourself why you said you wanted to do it to begin with. And if you've done anything to move it forward, it's pretty powerful.
Yep. I'm with you there. And this is the last question. This one's for the listeners. How can they get in contact with you? What's the best way to reach out?
Aaron at propertyradar.com. That's AARON. Or if you have any questions about data and you want to nerd out and you really want to reach me, just go to community.propertyradar.com. And if you post a question there, I'm the one who answers it.
Perfect. If you guys are interested in reaching out to Aaron, I'll put that link in the show notes. So just click the little more in the description below. It'll pop down the full description in there. You can find his link. Click through, say hi. And yeah, Aaron, thank you for hopping on the show.
Thank you for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You're the reason we do this, so we appreciate having you here. Again, the best way to support the show is just to subscribe, like, share this episode with your friends and family. Other than that, hope you guys have an absolutely kick-ass week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.